Hello, everyone. My name is Iker Lekuona, and I'm the director for the International Center for Asset Recovery at the Basel Institute on Governance. I'm very pleased to welcome you to the launch of the AML Index 2024. It's really fantastic to see such a diverse audience today, including public and private sector, as well as civil society, academia, and media representatives. AML CFT requires a collective and global response, and we are very proud of the role that the AML Index plays in enabling our partners to reduce the negative impacts of money laundering and terrorist financing, not just to strengthen the integrity of the global financial system, but ultimately to reduce financial crime and enhance international development and security outcomes. Now, allow me to walk you through the agenda for today. The launch event is scheduled to last 1 hour. We'll start off with a presentation by Kateryna Boguslavska on the main findings of this year's AML Index, including, crucially, the areas where we are seeing progress and some of the challenges ahead. Kateryna, I think, requires no introduction. She's the magic behind the AML Index. She does a truly fantastic job at leading our analysis every year and ensuring that the index continues to have impact. Her presentation will be followed by a panel discussion by world-leading AML CFT experts, which I have the privilege of moderating. Our panelists today, in no particular order, are Atuweni-tupochile Agbermodji. She works for UNODC as a regional AML CFT advisor for Eastern Africa, and she was previously the Director General of Malawi's Financial Intelligence Authority. Welcome, Atuweni. We also have with us today John Cusack, who is the chair of the Global Coalition to Fight Financial Crime. And before that, he was Global Financial Crime Compliance Head at both UBS and Standard Chartered. We also have with us today Alan Ketley, who is the Executive Secretary of the Wellsford Group. And last but not least, Helena Wood, who is the Director of Public Policy at CFAS, the UK's not-for-profit counter-fraud data sharing platform. Before I hand over to Kateryna for her presentation, very briefly, three main housekeeping points. One, please note that simultaneous translation into Spanish and French is available. So you just click on the interpretation icon at the bottom of the Zoom screen for those that want to access that feed. Two, please note that we also have a Q&A chat function that I will encourage all of you to use to post questions. I will do my best to pick some of your questions, but inevitably I'll have to be selective in the interest of time. Third point, I should also stress that the focus of today's discussion will mostly be on global trends. So for country-specific questions, we'll ask you to please send us an email at index@baselgovernance.org. And without further ado, over to you, Kateryna, for the presentation on the AML Index 2024. Thank you very much.
This is my great pleasure to present the findings, the annual findings of the Basel AML Index, Basel AML Index Public Edition 2024. And before we go to the details of my presentation, let me remind you about what is the Basel AML Index and why actually we started to do it in 2012. So Basel AML Index is a composite index, and it is an index to assess geographic risks related to money laundering and wider financial crimes. As I mentioned, we started to do it in 2012. Since that, it evolved tremendously. But the key point about it is that we are not intended to measure any amount of real money laundering across jurisdiction or within the jurisdiction. If we are talking about the index, we are talking about the risks and measurement of risks. We identify risks as a vulnerability of jurisdiction to money laundering and wider financial crimes, and capacity of the jurisdiction to counter these vulnerabilities. If we look more into details, the methodology of the Basel AML Index is structured within 5 domains. These 5 domains have their weighting system, which is expert-based, and all these 5 domains actually helps us to answer the question, what is the high-risk jurisdiction? And this is the one that have shortfalls in the AML CFT CPF framework: corruption, high corruption and fraud risk, low financial transparency and standard, low public transparency and accountability, and high political and legal risks. The whole methodology is available on our website for more detailed overview, as well as on our report, which we presented every year. In general, I would like to emphasize that we use 17 different indicators to calculate first the score per domain and then the overall score for the country. The most important domain is the first one, which has 50% of impact on the overall score. And within that, we have 4 most important indicators: FATF standards, mutual evaluation reports and follow-up reports, narcotic trafficking data, data on human trafficking, and data on environmental crimes. Starting from the last 4 or 5 years, we are constantly increasing our country coverage. This year, we added 12 new jurisdictions due to the increased data availability. In total, for the public edition, we cover 164 jurisdictions with sufficient data availability. We ask you to avoid superficial comparison per country from year to year, because the overall score might be influenced by methodological changes, and the ranking score might be influenced by increased country coverage. For more detailed information with availability of all 17 indicators, please subscribe to our expert edition, which covers 203 jurisdictions and provide you an understanding from where is the overall score for the country coming from. This year, we added some methodological changes. As I mentioned, the index is a dynamic tool. We always have to look at the trade-off to cover new threats and new risks coming from the wider financial crimes and keeping comparability of the results. This year, we looked at fraud data, and during the annual review meeting, took a decision to add fraud data to country assessment provided by the Basel AML Index. The simple answer why we decided to do it is that it is impossible to ignore fraud due to its huge social and economic impact and consequences. We looked at the data and we found out that only to one manifestation of fraud, which is online scams, generally, globally, people are losing $1 trillion. We know that fraud is a predicate offense for money laundering, and we also found out that fraud is one of the top offenses to be reported in suspicious activity reports in different countries across the globe. Take, for example, USA, UK, Switzerland, Canada, and many others. So that is the reason why we can't ignore fraud, and why we can't ignore fraud data. Speaking about data, the Basel AML Index is a composite index, so that we are looking to source the data on fraud. not surprisingly, we found out that there is nothing like global index on fraud, and the data that is available through the global organized crime index, and it is data on two indicators. First, financial crimes, which include financial fraud understood as procurement fraud, identity fraud, marketing fraud, banking fraud, as well as tax evasion, embezzlement, and misuse of funds. Unfortunately, we can't disaggregate data into different manifestations of fraud. They are within one category, namely financial crime here. We also take data from global organized crime on cyber-dependent crimes, which are identified as organized crimes dependent on the use of computers, computer network, or other form of information communication technology. You can see the different types of mention here. When we looked at the data, we couldn't confess that it's a lot of challenges in fraud data and in fraud analysis. So what are the challenges? Globally, we don't have recognized and unified approach to collect data on fraud. Data is mostly collected on the national level, separately on private sector, separately by public sector. The data accounts different definitions, manifestations, scope of fraud, where we don't have any unified approach. Additionally, we uncover the issue of underreporting data. This is due to humiliation or reputational risks when the fraud is not reported. One of the biggest challenges is about location of fraud crime, and it is because of cross-border nature of fraud and its different manifestations. In the result, there is a challenge where to allocate the risk of fraud, where the fraudster is located, where the fraud is committed, where the money was transferred. In the Basel AML Index and with the data of global organized crime, it's about where the fraud was committed. We don't have data on the response side or the prevention side, and this should be taken into account while looking at the impact of data on the domain 2, where we added it together with corruption, bribery. We checked for the impact of data across different countries and regions, and we found out that on global, the average score in domain 2 increased from 502 in 2023 to 5012 in 2024. That was due to the addition of fraud indicators. Interestingly, we found out that around 40% of jurisdictions actually increased their risk score in the domain 2, and this mostly include high-income countries and those with large financial centers. To name few of them, New Zealand, Switzerland, Norway, Denmark, Australia, Singapore, UK, USA, UAE, Japan, and many others. At the same time, on the other side, 50% of countries get a lower score in the domain 2 as a result of addition of new fraud data. It is important that the decrease in scores is less drastic than for those with increased risk score. At the regional level, we see a clear impact and increase in scores in the domain 2 for 3 regions, such as EU and Western Europe, North America, East Asia and Pacific. And at the same time, for 4 regions, we see decrease in risks that are Eastern Europe and Central Asia, Latin America and the Caribbean, Sub-Saharan Africa. For many regions, the changes is neglectable. The analysis and addition of fraud data bring us actually to the very complex conclusions, and it is more about a call which was recently announced by UNODC in their paper, a call to develop a global standard on fraud, to enhance collaboration, to improve efforts across different countries, to collect better data, to share data within sectors, and to coherently address it globally through the enhanced international cooperation. Besides adding data and analysis of data, fraud data in the Basel AML Index, as many other times before, we chose some topics to focus on. This year, we decided to focus on the topic of success. And it should be a legit question to ask, are we on the path to the success? What we identify by success, can we measure it? The success in terms of fighting money laundering crime. And to answer this question, we started with a very basic line to find out whether we are having progress in terms of international AML CFT standards set by FATF. So what we did, we took 113 countries and the data on the mutual evaluation reports of these countries as a baseline, and the data on the latest follow-up reports as a progress line. We covered the period from December 2014 till October 2024. Let's start with good news, what we found. We found out that on average, technical compliance during this evaluation period of FATF increased by 12 percentage points. So this is giving us some hope, but let's check more in details where specifically we see this progress and by whom. We see that much of this improvement comes from the lower performing countries, basically catching up with others. This is good. We see the increase in global standard. What is more positive about it, that we see the improved results, specifically in recommendation 22. It is about customer due diligence by DNFBP. Let's explain me here. DNFBP is designated non-financial businesses and professionals. For example, real estate, lawyers, notaries, dealers in precious metals. Why it is important that we see a progress there? Because traditionally, it is one of the areas with the lowest performance across other technical criteria or technical recommendations. We also see that the progress is spread unevenly. As I mentioned, most of the progress is shown by the countries that are catching up. At the same time, we see that around half of jurisdictions showing the progress less than at 10 percentage points from their initial results. I don't want to bring big hope about the progress in technical compliance. That is why it is important to look at effectiveness. With the effectiveness, it's not that easy to see the dynamics because the only changes in data we see with the increased data coverage. With that, we saw that in fall last year, with the increased data coverage, the global average went from 30% to 28%. This probably is not saying a lot, but we decided to look at the asset recovery chain, which is widely used by International Center on Asset Recovery, and we found out that the weakest line in this chain is on investigation, prosecution, and sanctioning, which is 20%. Other parts of the chain, such as use of financial intelligence, is on much better level at 34%. The other topic of focus for this year was grey listing and myths around it. We uncovered 4 myths and provided more nuanced approach in understanding FATF grey listing. I invite you to look at our report and read about, is the grey list only about high-risk countries? Is it a surprise? Does it only have negative impact for countries? And is it really unfair? So that is my presentation of the annual results of the Basel AML Index. My apologies for technical issues with the slides. And happy to start the discussion further.
Thanks, Kateryna, for that excellent presentation. I thought it very succinctly and clearly set out some of the global trends we can discern from the data. I think it's encouraging to see the improvements when it comes to technical compliance, and conversely, as you noted, effectiveness remains a weak point. There are too many jurisdictions not applying the relevant laws to secure money laundering convictions and confiscate illicit assets, among other issues. And also as you noted, the threat posed by fraud, it's very much on the rise. So in that regard, I think it's a privilege for us to have Helena Wood on the panel today. She's a very authoritative voice when it comes to fraud. And so I'd like to pose the following question to Helena. The Basel AML Index has included fraud in its methodology. So what are the issues around defining and measuring fraud for inclusion in a money laundering index? And a related question, do we need new approaches and instruments, or are we best served by using existing frameworks such as the FATF framework or existing frameworks for organized crime like the United Nations Convention against transnational and organized crime? Thank you very much.
Brilliant. Well, thank you. The privilege is all mine to be here with you from the Basel Institute. And I have worked in the Basel Institute for a short time, and I absolutely love what you do, which makes me all the more overjoyed that you've started to look at an issue which is I'm very passionate about, as you've spoken to, which is the global fraud epidemic. And I use the word epidemic not by accident, but by design, because I really genuinely think that's what we're facing. We cannot ignore this global problem. And to your credit, you've included this as something of a focus going forward. On the issue of measuring, I'll start with a challenge back to the Basel Institute. If not you, who? You have such great credibility in this space, and I would love to see more from you to try and deal with this very, very vexed problem of how we measure this at a global level. I personally can't think of anyone better to do so. So I hope I return next year and you'll have taken on that challenge going forward. But as to where this fits in with the Basel Institute's AML work, I think Kateryna really pointed out right at the outset of why this is a problem. It's $1 trillion problem. That's probably slightly a conservative estimate. This is a really growing problem, and it's not just a Northern Hemisphere problem. We're seeing this really impacting all across the globe. And if I need to state this, I'm sure I don't to this audience, but that's $1 trillion that needs to be laundered. So we cannot look at these as two separate things. One of my personal frustrations, having spent some time working in the financial services sector, quite by accident, for John Cusack, in fact, at Standard Chartered, is the extent to which fraud and AML are treated as functionally separate issues in most of the global banks. And that cannot be the case, but it's still the case that many see fraud as a profit and loss issue, whereas they see AML as a regulatory issue. And we've got to start seeing them as a trajectory. So again, challenge back to the financial services sector. I hate the term that's being used, the acronym. We're a world of acronyms, aren't we, in this space? But moving from AML into FRAML, fraud and money laundering put together. I increasingly hear that, but I don't see it in practice. And that we do need to talk about that. But to your first question, why is this so difficult to grapple with and so difficult to measure and define? And the first thing I'd point to, this is a very, very broad banner of offending. This includes everything from an individual at a really base level lying on a mortgage application about their income, right up to huge corporate frauds, the likes of we're seeing of increasing volume and velocity, such as FTX in the crypto world, or the Wirecard scandal. I can name many others across the globe. So it's this huge broad banner of offending. At the moment, the global conversation seems to merely be focusing on what I would name scams, so the more consumer focused end of this. But this is a whole trajectory of offending, and we can't just talk about scams. There are linkages between organised crime groups that are pushing out those big scams, but also mass scale identity fraud, which I see as a systemic risk to the financial sector and even to our economic security. And it's something we in the UK at CIFAS, it's 2/3 of the data that is shared via our platform is around identity fraud. So we need to get better at understanding the breadth. It's really difficult to kind of come up with a single definition, but I hope someone will, because we don't have a choice. We have to bring this together. And to your question, okay, so what do we need for fraud? And I've certainly, I've spent quite a few years in the AML space also, and recently kind of moved over to the fraud space as well. They talk of a FATF for fraud. I'm not sure that's exactly the answer we need. AML has very different drivers. The kind of levers we have available to affect change in the AML space are very, very different to those that we have in our gift in the fraud space. It's an issue that goes way beyond financial services and out into other players that are not part of that FATF conversation. The role of big tech, social media cannot be underplayed in acting as a vector of attack in this threat. So I'm not sure if FATF for fraud is the answer. That said, I was really pleased to see FATF focusing on this issue as one of their predicate offences they were looking at, in the same way that they've looked at other issues such as the illegal wildlife trade, drug trafficking, organised immigration crime. I think they can do more to look at the specific ways in which money laundering manifests in the fraud space, because it is in some ways quite distinct and different from the other types of predicate offences we've seen. The same weaknesses are used, but there are some very specific typologies for fraud money laundering. And I don't think that anyone really truly understands how that's manifesting. It's definitely more for FATF to do. But to your point on the UN, I think the only way really we're going to grapple with this is at an international level. Again, really pleased to see the UNODC putting a focus on this in a recent report. I'd love to see a sub-instrument of the UN Transnational Organised Crime Treaty with a focus on organised fraud going forward. Difficult to negotiate, but it will set the right tone. And if I may have a final point, mindful of time, I think we need to look beyond simply warm words and communiques, but look at practical steps. And there, I think we can look at what we've already got. So the cybercrime world and the fraud world are increasingly the same. We don't need to talk about cyber-enabled fraud anymore, because 80 to 90% is cyber-enabled. We've got the Budapest Convention on cybercrime, which has in place some technical elements in terms of country-to-country information sharing, which I think could be picked up, re-looked at, refreshed, and look at how that could be repurposed at a practical level. So there's a lot to do. I think we should keep this conversation going. I'm really looking forward to seeing what the Basel Institute does next on this. I commend you for concluding it this year, because it's a very difficult topic and somebody needs to start that conversation. Who better but you guys?
Thank you so much for those insights, Helena, and the praise. Certainly, there's a lot of work ahead of us, and we'll continue to shine a light on the negative impact on fraud through the AML index. The trillion-dollar problem, or the global fraud epidemic, as you have characterized this. But now I'd like to turn the discussion towards weak effectiveness and delve into this particular issue. And for that, I would like to turn to John Cusack. As I mentioned earlier, John chairs the Global Coalition to Fight Financial Crime and has played a very prominent role globally advocating for greater effectiveness. So, John, I have two related questions for you. The first is, what do we mean by an effective anti-money laundering system, or more broadly, success in the fight against financial crime? Very broad question, I realize, John. And then the second one, what would you count as real progress or success in the fight against money laundering and related financial crimes? And possibly going beyond how FATF measures it.
Thank you, Iker.
Over to you, John.
Yeah, thanks very much. I can't resist first not responding, actually doubling down on Helena's remarks. Helena, I prefer sci-fi to FRAML. I hate FRAML. Sci-fi is cyber financial crime. It's a thing of itself and should be treated as such. It is different from other stuff. And whilst I agree that it's probably unrealistic to get a financial action task force on fraud, we do need, as you said, an international response that's worthy of the name. And I think it's not just, I think it's a pandemic, right? If it's global, it's a pandemic. And we don't have that, even though the UN's just agreed a cybercrime convention. But if you read it, there's nothing in it apart from a bit of extra cooperation amongst law enforcement. It's not quite 40 recommendations targeted, is it? So we're a long way off where we need to be. And this is the issue of our day, probably. Iker, on effectiveness, I've been thinking about effectiveness properly for about 10 years. And I wasn't really thinking about effectiveness beforehand. I was thinking about just getting stuff done and keeping my auditors happy, my board happy, my regulators happy. But then after you've done all of that, or never possibly have achieved that, you then start thinking about the purpose of all of this. And Kateryna mentioned that, you know, the globe is now 28% effective. But effective as to what? To the IO11 FATF immediate outcomes, yes. But the bad news is, even if we're 100% positive ratings, you know, SE or HE, we're still not going to be effective under the definition that FATF provides under the IO11, which is really quite disappointing and challenging. There is an overarching objective, which no one can remember, and you have to go and sort of squirrel it out, which is essentially something that came out in 2013, which sits on top of the 11, which says it's about the integrity of the financial system. And it's a bit about safety and soundness, which is nonsense. And that's why we've still got to focus very much on what we've always had, on the banks doing the best they can, because it's officially about the international financial system, but it's not. If you go back 30 years to the founding, I was going to say fathers, then the founders, I should say, of FATF, and you read their first annual report, there was a whole bunch of law enforcement people in the room. And they made it really clear that what it was about was reducing harmful crime, particularly from drug trafficking. That's what it was all about. So the test ought to be whether or not we're reducing serious crime. And of course, we moved from just human drug trafficking in way back where 30 years ago to all crimes, all profit motivated crimes in 2012. So we've got 22 of them now, including fraud, thankfully. And so the test of effectiveness should really be, surely shouldn't it be, reducing those types of crimes and or reducing harms from those types of crimes. And if you look at the results, and you look at particularly IO 7 and 8, which is investigations and prosecutions and convictions, and then IO 8, which is asset confiscations. And Kateryna, you showed that slide in relation to even you know, the modest levels of positive ratings under FATF. Even the ones with good ratings are still woeful when it comes to investigations, prosecutions, convictions, and asset seizures in relation to money laundering. So even if we get a full green across the board, we're still going to be taking significantly less than we ought to be, or we should be considering. So moving from where we are to where we are is getting better, absolutely, but we're moving from very bad to bad, and that's not effectiveness in my book. The other characteristic I wanted to bring out is that whilst we are improving in the resilience side of things, inevitably, and FATF call this 5th round of mutual evaluations privately the 2nd round of effectiveness evaluations. Otherwise, it's a bit too embarrassing. It's been going for 30 years, so we've got this limited progress. But it's the 2nd round of effectiveness, and effectiveness does need to improve. But as I say, it needs to improve at a speed that's commensurate with the increasing threat that we're seeing. And as Helena mentions, the threat from fraud and scams is at pandemic levels. We've increased by design the threat by expanding from 1 predicate to 22 predicates. And we're seeing the evolution of all things cyber, which are changing and evolving the threat. And we're also considering the vulnerabilities that we're seeing within the financial services sector, right, where we've got massive fragmentation. It's not anymore about the banks, it's about everybody in the segment. And we want to have a place where it's same risks, same activity, same rules. We just don't have that. And it's about these other spaces like social media and technology that are not part of the debate or part of the response. So if you put all that together and you talk about inherent risk minus response equals net risk, the inherent risk has gone up substantially. The response has gone up, but not by anything like as much. And therefore, the net position is a deficit. That's how I would describe effectiveness. The last thing I would say is that if you go back to those founding papers at FATF, they talked about the cost of money laundering or the price of money laundering at somewhere between sort of 4%, so $4 in every 100. And because of the early FATF work, they got it to 6 to 8, they think. If you look at the most recent TD Bank USA case, which is drug trafficking, Colombian cartel, money laundering on the east coast of the USA, physical cash deposits, which looks exactly like it was 30 years ago. The price of laundering those funds is 2%, according to the money launderer himself, which tells you, the market tells you, it's easy to launder money today, and it's easier than it was.
Thanks, John, for articulating what I thought was a very clear vision of what effectiveness means and how it relates to tackling financial crime. I think the broader point that you made about the test of effectiveness being the ability to reduce economic crime, it really, really resonates with us very much. Amen to that. And I think your points underscores the need to continue to provide technical assistance to high-risk jurisdictions so that they can effectively close the implementation gap, prevent effectively, and apply the relevant laws and policies to secure convictions, recover assets, and I think ultimately deliver deterrence, right, for economic crime. Now, despite these challenges, I think, our analysis also shows that some historically low-performing countries in terms of FATF scores, including many jurisdictions in Africa, are increasingly catching up and have made big leaps in terms of performance recently. And this often has been triggered, this increase in performance or improvement in performance has been triggered by either the threat of being grey-listed or being grey-listed. But to reflect on this positive trend, I wanted to turn to Atuweni now and ask her to please give us insight into any positive lessons learned from countries, particularly in Africa, going through the grey listing process. Over to you, Atu. Thank you.
Thank you very much, Iker. Yes, so many of the countries that have been grey listed have come from Africa, and among the African countries, sometimes when you meet in gatherings, it's like, yeah, we formed the biggest club in the FATF. But at the same time, as much as this has come as a challenge for them, there have also been benefits from being grey listed. Some of them might not be so obvious, but they're there. So for example, some countries, the coordination and cooperation in the country has increased, not just among government institutions, but even with private sector. I know of one country that the national coordination team co-opted the private sector into the committee as they were working towards being removed from the grey list. So because that cooperation was already there for issues relating to the FATF grey listing, even after that cooperation continued. In some countries, it has resulted in phenomenal law changes. So where I'm staying right now, for instance, Kenya, they passed an omnibus law. You know, all at once, everything changed at the same time, such that at the last meeting where their progress was being reviewed, not by the FATF, but the SAMALAG, they had increased compliance in 18 of the recommendations that had been graded as non-compliant or partially compliant. And that is something that is good, because what happens with that is that it increases confidence in the government in terms of the public and the private sector looking at them as being serious about doing something about it. And also grey listing increases the amount of discussion around money laundering fraud. The past month, just riding in taxis and listening to the radio, all they talk about in Kenya is wash, because Kenya has been grey listed. I mean, it is coming in all sorts of, so you can imagine the amount of public awareness that is out there. So not only people are they aware that money laundering is a problem, but also people talk about fraud and fraudsters and what they do, the different types of scams that are happening. Here with mobile payments being a big thing, they talk about mobile payments a lot. So that awareness also makes the public aware to be careful about some of the transactions they're involved in and things just happening generally around them. And that is good for a country. That momentum, if kept, can help to really clear a lot of rubble. Apart from that, there are also instances where, you know, for countries, they now end up having champions for AML, even within the government sector. And that is an individual that really talks for the system, talks about why the grey listing has happened, where the country should go, what it should do, how it should do it, and is really like a bridge between the technical experts and the powers that be, the political powers. And that person, in most instances, can end up really being a driving force and making things happen and really putting the country in a spotlight. So there are some real positive impacts to the grey listing, and it's not all doom and gloom. Thank you.
Atuweni, thank you so much for those excellent examples. I think it's encouraging to see that the grey listing process does, in fact, generate incentives for greater incentives or greater impetus to enforce, to embrace AML and CFT reforms. I was interested in the point you made about the champions for AML, and we would very much like for the Basel AML Index to enable these champions to turn the analysis hopefully into action. Now, I wanted to turn our attention to the concept of risk. We obviously, adopting a risk-based approach is a key aspect. And to do so, no one better than Alan Ketley, who, as I mentioned earlier, is the Executive Secretary of the Wellsberg Group. So Alan, the question for you is, the Basel AML Index is a framework for measuring country risk and includes a range of factors that could contribute to a higher risk. But if we take a step back, why in your view do we need a country risk assessment in the first place? Apart from it being a legal requirement, but why do we need it? And then I'm very keen to understand, why is it important from the perspective of a bank? Over to you, Alan. Thank you.
Sure, thank you. And kudos to the Basel Institute for this great work and for the invitation today. Iker, I'd like to start with just building on something Atuweni said. No country is grey listed by surprise. They know it's coming. It's embarrassing. It's a mark of public and international shame. But it unfortunately also is what is sometimes necessary to unlock the resources to remedy a situation that has been known for a while. I think the expression there is that, it's a crisis, but you don't let the crisis go to waste. So let's talk about the index. John knows me for a long time, and I always like slightly different ways of looking at things. So when somebody goes into a hardware store to buy a drill bit for their drill for a home improvement project that they're working on, they don't want a drill. They want a hole. So if the index is the drill bit, what is the hole? And the hole is the requirement that a bank have a risk-based approach. Big banks process millions upon millions of transactions for millions of customers every day. And you need a way to try and figure out who is more risky than the others, because you want to spend a lot more time and attention ensuring that you understand the risk of the highest risk customers. There is nothing wrong with having high-risk customers, so long as you have appropriate controls. And the analogy I use for this all the time, and I won't be using it much longer because I'm retiring soon, jumping out of an aeroplane is a high-risk activity. If you have a parachute, you have a way to mitigate the risk. So in the same way as you wouldn't jump out of an aeroplane without a parachute, you shouldn't be banking high-risk customers without appropriate controls, and you shouldn't be banking them without understanding whether they're high risk. So a bank will use the AML index and other similar tools to help it understand the relative risk of different clients and different transactions. But there's a challenge here. If I am a bank in Switzerland, picking on Switzerland only because that's where you are, and I have a customer who is from a country that everybody agrees is a high-risk country, should I call them high risk? Well, if all they ever do is transactions in Switzerland, that doesn't really make very much sense. Because if I treat that person as high risk, then they're behaving no differently to most every other Swiss person, and I don't really have a risk-based approach. So a bank will look at the country risk associated with customers and have to apply some judgment as to when that country risk factor is appropriate. They'll also look at the country risk in terms of the transactions that customer does. The customer from a high-risk jurisdiction with a bank account in Switzerland who is only transacting in Switzerland is almost certainly much lower risk than that same customer when they start transacting with their home country. But the question that the bank has to analyze is the transaction high risk, or is the customer now high risk? And that requires judgment, that requires calibration, that requires expertise. FATF is a very useful source of information for this. It is, as far as anything goes, as objective a source as you can find. But it should never be a substitute for your own experience and judgment. If you're dealing with a counterparty in, let's go extreme, and let's say a grey-listed jurisdiction, FATF is kind of an average of everything in that jurisdiction. There will be people who do well, and there will be people who do less well, and that's part of the bank's obligation to have a risk-based approach in terms of understanding who's who, and do they understand the risks that they're managing. If they're getting ready to jump out of an airplane, do they have a parachute or not? Thank you.
Thanks, Alan, for so compellingly setting out the importance of country risk assessments and how the banks use them. I'm a bit concerned about the time that we've got left. So I think that before closing this launch event, I wanted to do a quick lighting round and ask Kateryna and our panelists the following question. So looking back at the AML index findings and other recent developments, what gives you hope that we are going to tip the balance in the fight against financial crime? So I'll tell you from my personal perspective what gives me hope. So I am personally excited about the FATF amendments to recommendations 4 and 38, because I think in addition to highlighting the centrality of asset recovery, I'm really excited about the call to adopt non-conviction-based forfeiture laws and ensuring international cooperation in the context of non-conviction-based forfeiture cases. The application of non-conviction-based forfeiture laws we found has been a game changer in some of the jurisdictions that we support, and when it comes to driving asset recovery outcomes and delivering deterrence. And I'm hopeful that we're going to see more jurisdictions adopting these laws and cooperating in the context of non-conviction-based forfeiture cases. So this gives me hope. Now over to you, Kateryna, for what gives you hope?
I think I am hoping for the next round of evaluation, previously already mentioned here and in line with your hopes. But my general approach is that the new round of evaluation with even more focus and effectiveness, focus separately on the financial institutions and non-banking professionals separately, is a great motivation for countries to work now to coordinate, to improve their infrastructure, AML CFT infrastructure, as well as to work on the deliveries that would account for effectiveness. I think that it's a great hope and a great motivation to move forward.
Thank you very much for that, Katya. Who would like to go next?
I'll jump in if I may to follow Katya. The thing is, we hope is a public-private partnership becoming a norm rather than an exception, and the ability to really drive that forward with the use of data analytics, AI as a good factor and the bad factor. I think we're seeing some really innovative public-private partnership work happening, particularly across major global financial centres, and that really the ecosystem approach we've been talking about for years, I think, is starting slowly to happen.
I'd build on that. I think combined with all of that, I mean, a lot of jurisdictions have seen that if they don't have a private-public partnership, then they get dinged by FATF, so they create a public-private partnership, but they don't empower it. We've seen some jurisdictions empowering it. We've seen them that they get benefit from that. We've seen that acting as a beacon to other jurisdictions. And I think when you combine that with, I think, a realization that the ecosystem is not working properly, that simply having the obliged entities, the banks and the lawyers and the insurance companies and the broker-dealers file more and more suspicious transaction reports year after year, that's not solving the problem, as John spoke to and as Kateryna identifies, because if there's no good thing comes out of more and more reports going into the financial intelligence unit if that doesn't get matched by an increase in prosecution and an increase in the number of bad guys who are being put away. And the numbers are ridiculous. I mean, there are millions of these things filed every year in the US, and it goes up by 20% a year. The percentage that are actually used successfully in a prosecution is painfully small. And there is, I think, a growing realization that it might be better to start thinking about better rather than just more. And I'm hopeful that people will take that forward. One of the things we've tried to develop is a thought that it's not just inefficient to file more, because nobody much cares whether something is efficient as far as a bank is concerned. We're not a particularly loved industry sector. But I think the sheer volume of these reports that the obliged sector creates actually causes harm in the public sector. Because the industry can shovel them into the financial intelligence unit faster than the financial intelligence unit can analyze them. And that's a problem.
Thank you very much, Alan, for that very inspiring reflection. John, do you want to lay out what gives you hope?
Atuweni, would you like to go first?
Or Atuweni?
Oh, okay. What gives me hope is that now with the proliferation financing being risk-based, a risk-based approach applying to it, countries will have more resources to apply to the things that really matter. In the last round, having proliferation financing on rule-based and countries just had to do it, it was really tough for countries in the low income bracket. So now that really helps. And it also gives hope knowing that FATF is listening to the countries that have less resources, and understanding that something like that, proliferation financing, might be something that does not really affect them. But yeah, they were spending money on it when they don't have to. Thank you.
Thanks, Atu. Over to you, John.
Well, I was always told hope is not a strategy. So it really doesn't matter what we hope for. It's what actually we plan to do that works, that it really counts. Tomorrow is an important day, December the 6th. I think it's tomorrow, December the 6th, where FATF closing date on the consultation on recommendation 1, which is the risk-based approach. And whilst there are really modest changes being made to try to tackle things like unfair financial exclusion and what have you, which we all support, I think we need to go much wider than that. And I support fully what Atuweni was just saying, but also it needs to reflect, the risk-based approach needs to reflect the nuance that Alan was talking about in relation to customers and transactions, which isn't reflected and is very difficult to pull out of the standards. And we end up applying high risk and increased risk and therefore countermeasures to far too many things. Most of us are not crooks. Most of us are not involved in problematic transactions, even from high-risk countries. The vast majority of people are not. Their inherent risk high, maybe inherent risk, only because there's an increased incidence of other people of criminality in that space. That doesn't make anybody or everybody from those countries, or with that customer type, or with that product and service, or with that channel, actually high risk. So the real true risk-based approach is basically getting risk right so that you do actually apply, to the potentate who's got a Swiss bank account, as opposed to someone who's been living in Geneva for 25 years, right? That's what we need to do. We need to go back to where we started with this, which is, yes, prescription is important to get to a minimum level, but then we do need to operate a risk-based approach based on a thorough understanding of threats and vulnerabilities and have those bespoke and tailored to individual customers and transactions to the extent we can. We will make a detailed response to the FATF recommendations or the FATF consultation tomorrow, and I hope other people will support that as well.
I'd like, if I may, just to add to that. I mean, John's absolutely right. I think the risk-based approach is one of those terms where if you ask 20 people what it means, you'll get 20 different answers. And I would hope, recognizing that that isn't a strategy, that over time, as we ask that question, we get a coalescence and more agreement amongst the actors in the ecosystem as to what it actually means. And as John says, a recognition that there are times when you can do less, and it's perfectly justified to do less.
So with that wonderful final reflection, that brings us to the closing of the launch event. I wanted to thank the team behind the AML Index again, very especially to Kateryna Boguslavska, who works tirelessly all year long to ensure that the AML Index continues to deliver impact. I also wanted to thank the communications team, which is headed by Monica Guy, who do a truly phenomenal job at communicating the key trends and advocacy points arising from the AML Index on an annual basis. So yeah, a round of applause for my team. Thank you all. Thank you, of course, to the excellent panelists. Really, it's been a privilege to get your insights today. And of course, all of you in the audience for your participation and continued interest in AML and CFT issues. We are very much looking forward to continue to work with you to translate the AML Index analysis into global action. And as John said, effective strategies and not just hope. And by so doing, reduce the impact of financial crime. Thank you all very much. Thank you all for your participation. I look forward to seeing you again for the launch of next year's edition of the AML Index.